Hey, what's up, guys? We're gonna be learning together. So this is a little session I'm gonna have right here. Just back testing a couple of Nas, Nasdaq, NQ futures trading, and I just wanted to do it on camera. That way I could rewatch this over. I could easily just record this, keep it to myself, and just rewatch this over. But I also wanted to put it out there. That way I could like make content at the same time, and as I'm learning, as I'm trading, as I'm looking at charts, I'm also getting you guys' input, right? So whatever I do and the thought process I have, you're gonna see the way I move, the way I think, the way I attack. You're gonna see my moves, basically inside out. But you might also have your own opinion, and I might be willing to learn that opinion. I might be willing to listen to that, right? So if I'm doing a certain thing, let's say I'm looking for a silver bullet, right? And I'm like, oh, I'm gonna look at it 5, 10 minutes earlier, and you're like, oh, you missed this, you missed that. That wasn't displacement, that wasn't that. That's how we're going to work together. So let's go. On replay mode. So by the way, this account is shared between me and my brother. We both trade this, so we got a few indicators on it and stuff and whatnot. Um, I use some of these zones, mostly like the change of character, breaking market structure, blah blah blah, and these are basically I think they are FEGs, depending on which time frames and stuff. But let's go. We're gonna go in replay mode. We're gonna pick a random time. I don't know how this is gonna work, to be honest. Oh, it's already messing up. Select date. I don't know. Let's say Monday the second at 9. Hello? Am I missing something? How do I? Okay. Is this what we doing? Is this today? Monday, September 2nd at 9? Thank you. Okay. Sorry, guys. But yeah, so we are here, right? 8:59, almost 9 a.m. We're gonna let this play. We're gonna wait until at least 9:15. Boom. Okay, so 9:15 right here. So what usually I like to do is really around 9:30 I start looking for setups, but the only reason I'm doing this is because I wanted to back test because there's certain times where you might find a move at 9:30 instead of the regular 10 to 11. So me and my brother we traded the silver bullet session, right? We traded the silver bullet during the New York session, which is from 10 a.m. Eastern to 11 a.m. Eastern. So a lot of the times we wait until 10 a.m. wait for the buy side liquidity or sell side liquidity sweep. We wait for the displacement candle and then a retest back into the zone. But after during the displacement candle, FEG is created. And that's when we take our entries in that FEG zone that has been retested in. But a lot of times, the move to get a better move, it usually happens around 9:30, 9:45, 9:50. It usually happens a few about 30 minutes to 15 minutes before 10. So this is why I'm back testing so I can see, oh, maybe I could find these entries around 9:30 or 9:45, 9:50. Because a lot of the times when you get those early entries, quote unquote, you have a better swing, you have a better risk to rewards ratio, right? You get it in early because you're able now to go for the 1 to 3, 1 to 4, 1 to 5. The ones from 1 to 10, sometimes it does happen. You get a good entry between 10 to 11, and then you could get a good 1 to 5, 1 to 6, 1 to 10, whatever it may be. So let's say here I'm gonna start marking my things up, right? I'm gonna let this go for a little bit. So boom, this is 9:30, and this is the high, current high right now, right? You might be hearing some sounds from my phone, so sorry about that. I should. Um, This is buy side liquidity, which is BSL, right? We got buy side liquidity, and you guys are also telling me how bad this is, right? So this, we're looking at the highest high and the lowest low. The lowest low technically is down. If I go through here, we'll be down here technically, right? Right. But we're going from the last low, which is the if you go from lower high, lower low, lower high, lower low, we're going from the last low, which is right here, right? So boom, this will be sell side liquidity. Sell side liquidity, SSL, BSL for buy side liquidity. Boom, this is how we have it. So we gotta let it run until right here at 9:30. So now we are here at 9:30, right? So we're gonna test this out at 9:30. If it doesn't work, we'll keep going until 9:45, then 9:50, and then do the actual 10 to 11. But here at 9:30, sorry, let me put my phone on mute. At 9:30, we have well, at 9:29, we have a sweep to the downside, right? It broke sell side liquidity right here, breaking it. This was the first candle that broke through, and then another long candle, another long candle. So in this case, for me, if I were to look for an entry starting from 9:30, I would have seen that, okay, boom, price broke up, broke up, broke up. It's from that candle that pushed and broke through. That's what my displacement candle is. That's what I think it is. I haven't looked too much into what the word displacement is, but from watching Silver Bullet videos, I haven't really seen anybody explain it like for real, for real. So I usually say it's the candle that breaks through, and it's also the candle that helps create the FEG. So in this case, to me, it would be this, right? Well, yeah, whatever. It would be this, right? My displacement candle would be this yellow candle right here. And there's a FEG, there's a gap that's in between this candle and this candle. The FEG is created within three candles, one, two, three, and there's a gap between the top of the third candle with the bottom of the first candle, which is what we drew in the square right here. So technically, if we were to look for an entry after 9:30, we would wait for a retest in the zone. So currently, right now, we have a white candle in the zone. It's at 9:31. So best case scenario for us to get a proper entry, this candle should push up and come back down. The body of this candle should not close outside of this FEG zone, basically outside of this box. And since another thing too I want to do, since we're in the highs, I'm looking for shorts. If this were to happen down here, in the lows, I would be looking for buys. So you know the saying usually people say for stocks, you sell. I was about to say sell high. You sell. Sorry. Whoa. You sell high, buy low. I'm confusing myself. So in this case, we are high in the charts. We're gonna sell high and buy low. Right now, we're looking for sells because price broke through up and then left. Yeah, price broke through up, came back down, broke through sell side liquidity, left a FEG zone. Like I said, this will be my discernment, my displacement candle. And using my discernment, I would say I want to place a sell in this zone. So now let's play it one candle at a time. Let's see if this candle closes inside this box. So, so the candle literally closed inside of the box, and like I said, you don't want the body of the candle to break the FEG zone because you want it to fill the fair value gap. You want it to fill the gap. So the candle itself, the body of the candle itself has to stay within the gap. It shouldn't break outside of it. So in this case, it went exactly in, wicked out of it, which is completely okay, and came back down. Now, oh, is there a way for me to do this? Okay, so now let's go back, right? Here we go again. Price, this is that one candle, price went up. So boom. After this candle, we waited for the next candle to happen, right? Most of the times I wouldn't take my entry if the body of the candle is all up inside the gap like that. Even though it wicked in the fair value gap, even though the body is inside and it wicked outside the fair value gap, I would mostly take my entry on something like this because this shows more of a liquidity sweep, or how you say a stop hunt, right? Big body, big wick came back inside the fair value gap. This is when I'll start looking for my sells. So right now, this is where I would sell after this long wick. So take my short position. Price is probably right here, and your um, technically what they say is you have to place your stop loss above the last candle of the displacement candle, right? So in this case, is above here. Put a few pips up. So right here. Now remember we had this wick. To my concern usually is if you have that much of a wick, price did an extended stop hunt up there. Price shouldn't go back into that zone because they trapped a whole bunch of buyers. A bunch of people that went long are now trapped in this wick going down. This is how I see it. This could be wrong after I press play and price could just completely break through. But as I'm watching it candle by candle, this is what I'm understanding. This is probably what a lot of you are also doing as well. So right, I'm entering my trade here, and I will go for a 1-to-1. Like the only reason it's a 1-to-1 like this is because my stops are above here. I'm doing it just for what do you call it, a safety measure, right? Because technically my stops could be here or here, but I like to keep it at the candle above the displacement candle, which to me this is the displacement candle. So right here, the body of it, the wick of it. Sorry. Now I'm going for a 1-to-1. Technically, a lot of times I go for 1-to-2s. So this is a 2 ratio right here, and 1-to-3. So what we could do is this is a 1-to-3. So what we could do is we could take this right here, mark up TP3. Go back up to right here. That's 1-to-2. We want to mark up TP2. And then we're going to go back to the 1-to-1. TP1, right? So the whole move, I want to see this whole thing happen. We have our entry, which is here, currently here. We have our TP1, TP2, and TP3. TP is mean take profit, right? So the first thing first, always get your TP1. After your TP1, you could bring your stop loss to break even. So this will be my stop loss, right? Up here, I'll make it here, and I'll also make it red. This is my stop loss, right? This is my entry, this green zone. Should I really show you guys this? This is my entry. I'm gonna do that. I let it play, one candle at a time. Boom. TP1 has been hit. Now, I take my stop loss, bring it to my break even. So let's say if I were to sell, oh, I didn't do this right. Can I still do it? Let's see. Where did I enter? Here. Next candle, boom. So let's say you were to sell for three, three minis. Oh, there you go. Perfect, perfect, perfect. Stop loss up here. So I don't even need this. And take profit. Full take profit is down here. What? Let's do this again. Stop loss here. Take profit. Am I bugging? Sorry guys. Let's just one more time. Sorry. Stop loss up here. I'll leave it like that and I'll let, yeah, so I'm risking $345 to make 1,045, right? So I'll let this play. So boom, take profit has been hit for about 345. So what you do now is take your stop loss, you put it as break even. So now you no longer risk $345. You're risking $0. And then remember, I don't know why I can't bring this down, honestly. Yeah, alright, I'll do this one more time. I don't know why I'm bugging. Alright, next candle. Alright, this is where I go. So boom, stop loss up here. Y'all, what is going on? What is going on? Alright, here we go. Again, take profit hit. We bring our stop loss to break even. So $0, right? And then you let price continue. So I entered with a three mini, right? Because we're trading the Nasdaq E mini futures. Three minis. I'm gonna close one mini at take profit one. So therefore, three of, let's see, I'll close. Sorry. I don't know if this is gonna work. Cause technically, if I buy one, that means I'm TPing at one. Boom. There you go. I closed off one mini, so now I'm letting two minis run down for my other take profit zones. And now my stop loss is at break even. This is a risk-free trade. I closed off $110 because technically, if I were to close all three of my minis right now, I think this would have been like 345, right? But I'm scaling down. I closed off one, so I closed off $110, and then now my trade is risk free. My stop loss is at break even, so if my stop loss goes and get hit, it'll be at $0, and I'll still capture $110. So we let this ride and see where it's gonna go. Boom. So now I got stopped out, right? In theory, I made $110. I got stopped out at break even. And good thing I did because at least I made some money. This is why after TP1, you bring your stop to break even to secure the first profit that you got. That way you don't lose any more money. It's not that you don't, yeah, you don't lose or risk any more money. You captured part of your money and then you keep going. Let's see if price just keeps blowing up or if it comes back through. So at this point we are, when we first hit our TP, we were at 934. Let's see what's happening until 9:45. All right. So now this is what, a 944. See next candle. This is 945, right? So all of that being said, TP2 almost got hit, man. This would have been nice. TP2 almost got hit. So let's say in this scenario, price continue pushing down. If TP2 were to get hit, what I would now do is take my stop loss and bring it into profit. That way, if TP2, that way if price does go back, now I get stopped out in profit instead of getting stopped out at zero at break even. But if TP2 also got hit, that's when I'll be closing another entry, another mini, right? So in this case, let's say I closed off 100 here, probably closed off another 100 here, and then the third TP probably would have never got hit, right? So in this case, I would have probably made 200 plus USD. This is all just managing my risk, right? So price went up here, 945, price pushed through. It broke buy side liquidity. Big candle push up. Let's see what happens till 950. So what time are we? Are at 952 right now. Price broke all the way through, created a huge FEG zone right here. Price is chilling in that FEG zone. Let's see what happens. I'll let it ride until 10. It is 9:59. One more candle. All right. So now we are officially in New York session silver bullet. This was a pre-silver bullet because I was looking for entries at 9:30, right? From 9:30 because 9:30 was like right here, and then this happened. I took the entry here. So now we are officially in silver bullet session from 10 a.m. all the way to 11 a.m., right? So what we could do is for the visually impaired folks, we could do this 10 to 11. So between these two vertically blue lines, this is when we look for actual entries. This is what we're supposed to be doing, right? Like I said, this whole video that I'm making right now is to show you guys sometimes there are some setups from 9:30, 9:45, whatever it may be, right? So now that we had this 1-to-1, almost a 1-to-2, we still made some money, $110, boom. Now we waited for the whole actual market to move. Now we're in the territory to look for actual silver bullet trade. So now it is 10:02. What we're looking for is, should I delete some of this? I'll keep this. Actually, I'll delete it so I won't confuse y'all. Alright. Okay, and then delete this right here. Okay, boom. So now we still have this sell side liquidity right here, right? Which is what price broke through. But now that we create a new low compared to this sell side that was already here, this would be the new sell side liquidity. Actually here from 935 because this was the lowest low and this is now the highest high. So this would be the new buy side liquidity. Alright, so now what do? We wait. Sorry, y'all. Oh, actually, I'm gonna use this so I could just relocate it. So I'm just gonna move this out the way. TB2. Where TB1 go? Oh well. Yeah, so now Now we're waiting for a liquidity sweep to the sell side, right? This is sell side liquidity right here, this dotted line. So what we want is price to break underneath this displacement candle back up, creating an FVG fair value gap, and then a retest into that gap so I could take buys. Because since now price is low, we're looking for buys. We're actually in the demand zone as well. So you see all that blue stuff. I'm not sure which one is which. Oh snap. Okay, let me remove that for y'all. So now we're in the demand zone, right? We are at the lows. What do we do at lows? We buy low, sell high. Before we were selling high, buying. We're selling high, anticipating price to push downwards. We got our 1-to-1. We got stopped out afterwards and break even. Now we're actually in the territory for silver bullet 10 to 11, which is these blue vertical lines right here. Now we're looking for a liquidity sweep to the low side. Displacement candle back up, create an FEG, and then retest into that FVG zone. So we're gonna let it run until we get a liquidity. We got a liquidity sweep. Move this up. We got our sweep. So in this case, we got a new lower low that was created, right? In this case, this probably would have been a trade because we got the liquidity sweep. This candle actually was the first one to break liquidity, and then this one actually had a candle through, a body through, and then this probably would have been displacement candle. Like I said, I don't fully know what the displacement candle is, so I probably wouldn't have taken this, especially since I'm looking for buys. I wouldn't have been looking for sells, because in this case, this created a FEG zone. There's already a box right here. They switched the FEG zone, so a sell side liquidity break. Displacement candle is probably this long one right here. FEG was created between that, between the 1, 2, 3 candles, which is the box right here. There's a retest in the zone with this white candle right here. It retested into that zone and price fell through. If this were to actually be a trade, stop loss would have been above the displacement candle, and then you would have looked for your 1-to-1. 1-to-1 would have been hit right here. And then you would have looked for your 1-to-2. 1-to-2 would have been hit right here, and then eventually 1-to-3. So in this case, 1-to-1 and 1-to-2 would have got hit, and price coming back up here. Eventually, you would have brought your stop loss to not just break even at 1-to-1, but you would have brought your stop loss in profit, right? So you would have got your 1-to-1. I know it says TP2 and TP3, but imagine it's TP1 and TP2. Yeah, you would have got your take profit hit here, take profit 2 here. And for take profit 3, it wouldn't have hit because it would have been at the bottom here, right? It would have almost hit, but it would have missed out. And then your after take profit 1 being hit, your stop loss should have been at break even, which would have been good. Take profit 2 would have hit, it would have bring your stop loss to in profit, stop loss in profit somewhere around here, somewhere before TP1. Some people put it at TP1, but sometimes it retrace to TP1, so I don't put it at TP1. I put it slightly above in between. And then price would have came up, stop you out. You would have made whatever you made plus some change. So let's go back to it right here. Where was it? Stop loss would have been here. And right here. Take it right here. Stop loss would have been above, and then you let it go. You got your sells right here. Boom. TP1 would have got hit. TP2 would have almost been hit. If the TP2 hit, you would have closed out 2 of the trades. You would have had 1 left. So at this point, 480, you would have made 480 on the first 2 TPs, TP1 and TP2. You would have had 1 more mini left. And then that last one, like I said, price would have came back up. Almost tapping you out at TP3, but it would not. So price would have came back up, closing you out. If you have brought your, let's say your stop loss would have been right here in profit. Boom, close you out. You would have hit 1, 2 TPs. Your third profit wouldn't have been hit, but you would have made $520. So you would have pushed up, and then price would have just kept pushing up or doing whatever it was doing. But with this trade, you would have made at least 520. You would have only risked what? I think it was 200, 300 something. But you're risking 200 to make 520. So that's 1 or 2, which is basically what happened. Your first 2 TPs hit, and then at the last one, you got your stop loss was hit and profit. So the same thing would have happened. Let's say where are we at right now? This is the 10 to 11 a.m. So we're bullet, right? So let's say you were to let price go all the way through to 11. Just switch it, put it here, and see what happens. The price go through. Boom. Now we're at like what, 11:04. So we took 2 different sells. One was at 9:30, and one was at 10:12, right? This was the official silver bullet session because we're between 10 and 11. But let's say you didn't take these sells right here. The better play would have been these buys right here. So let's say we remove all of this. We move this out the way. Move this out the way. We still got the sell side liquidity, right? We take this and let's just restart from here. Slowly letting price move. Let's say it's at 0.5. Let price do its thing. So remember, this was sell side liquidity, but price kept breaking through, So we would have moved it until we had an official lower low. So this would have been our, well, this last candle would have been our lower low. This bottom of this yellow wick right here, this would have been a lower low. Price broke through, sell side liquidity has been swept. Price has been pushing up. So now the displacement candle, what we needed is a big white candle that pushes up, and then price to revert back down under an FEG. So let's say we push this here. So this candle right here, right? This white candle pushed up. This would have been our displacement candle. We grab a square here. We want price to retrace back into the square zone. We let price push up. Price never came back down into this. So we have multiple FEGs along the way. Multiple FEGs. The main one that might get retested into is probably this one, because this is like this was a change of character, right? This was last seen as a change of character, so price might retrace into this and might not retrace into these. So let's see what happens. And look, price just kept going and going and going. All of this is on the 1 minute, guys. The 1 minute. Oh, sorry. Oh, no, I'm messing up. Like, look, price never came anywhere near these. Look how many FEGs were created. Boom, boom. I'm not sure if there was news or whatever it was, but price never retested. We never got a test, a retested area. Look, 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 look. Price just keeps going, keeps going. So this is a great example to tell you, even if you wait for a silver bullet to happen between 10 and 11 a.m., you wait for sell side or buy side liquidity to get swept. You wait for a discernment candle. You wait for, price to complete, to hurry up, because for what I understand is a displacement candle is when price want to get the hell out of there, right? You're grabbing a certain amount of liquidity and you pushing out, so you're just like basically trapping sellers or buyers. So that's why the displacement candle is to me. So in this case, this is why I thought this was a displacement candle, because price, broke through sell side liquidity, pushed up fast. Look how big that white candle is. Pushed up fast, got out of there, created an FEG between one, two, and three candles. This was the first FEG that should have been retested, and then multiple FEGs were made along the way. So let me just erase these, right? Multiple FEGs were created along the way. I should put this up here too. Huh? Yeah, multiple FEGs were created along the way. So best case scenario, what should have happened is after this, price should have came back down here, do his stupid price movements, probably do another double bottom, and then did all of that. But price did not do that. This is what price should have been. But see, if you had waited for your regular 10 to 11 silver bullish and you only traded the setup of a proper silver bullet, right? It's liquidity to get swept, which it did. Displacement candle, which it did. Fair value gap, fair value gap being created, FEG being created, which it did, and then a retest into the fair value gap to take your entry, which it did not do. That was the only thing that did not happen. Even all these candles, there's no fair value gap in all of this, and none of this. Sorry, I should say none of this, and not even an inverted fair value gap. Like even if we were to take an inverted fair value gap trade, none of them happened except the only fair value gap we kind of got that was retested was this right here. So we got one, two, three candles. This is the retest into it. This would have been the only possible entry, on which would have been what, at 10:34. This would have been the only possible entry, which would have been good. Which would have been good. Let's say you got tested here. The thing is, your stop loss would have been here underneath the fair value gap, because technically it should be here underneath the candle before the discernment candle, displacement candle. Sorry, it will technically be here, but that's a lot. And then you're looking for your 1 to 1, which is here. Your 1 to 2, which is still here. Would you have gotten your 1 to 2? You would have. You would have gotten your 1 to 2. It would have tapped at 11:08 outside the 11 a.m. session. When it comes to trading silver bullet, even though you have the two blue vertical lines, right? It's between 10 to 11 a.m. Your 10 to 11 a.m. is just your entry. Your trade could run until end of day for your profits to get hit, but it's best to let your trade run for about an hour, and after that you close out. You don't want to let your trades run for too long. Unless if you're a scalper, you could take your 20-30 minutes and you take your 1 to 2, because your 1 to 2 would have got hit from what your entry would have been at 10:34. Your 1 to 2 would have got hit at 11:08. That would have been like what, 26, 30, 34 minutes. Your first two take profits would have got hit in 34 minutes. Let's say you waited another hour until like 11:34, right? Because you entered at 10:34. Let's say you waited until 11:34. Let's see what happens right here. Let's see what happens at 11:34. Let's see. Now we're at 11:34. Let's see you held your trade for an hour exactly. Your first two TPs would have got hit. Your stop loss after your first take profit, your stop loss would have been put in at break even. After your second take profit, your stop loss would have probably been put somewhere between your take profit one and break even, so probably would have been here. So technically, your stops wouldn't have gotten hit yet. If you waited a full hour, you probably would have closed here. Or if you wanted to get hit, let's see if it goes down any lower, boom, you would have been stopped out right here, and then price probably gonna keep pushing up, right? Of course it does. Yo. But yeah, just to tell you how this was a tricky one. See how hard this was and how long it took just to get a proper entry, which it really comes down to just patience, right? Because it took what from 10 to 10:34, it took 34 minutes to get an actual entry. But all of this, boom, boom, price just kept breaking through. Just long candles going up, going up, going up. No retest. Our first retest was 34 minutes in, which is right here, into this fair value gap. And that's it. You would have took that trade. You would have got, a 1 to 2. Let's see how much money you could have made. Let's go back um, to here. Boom. Trade would have been activated here. You would have bought here. Stop loss would have been down here. See, look how deep that stop loss is. Oh no. Oh, is that what I kept doing? Oh. Okay, so take profit would have been up here, 1935. Stop loss would have been down here. So this is bad. This is I'm risking 1,300. Technically, this had to be at the bottom, so I'm risking 1,395. So basically 1,400 to make $2,000 almost. I mean, this is what I kept doing wrong. I kept dragging down the take profit instead of the stop loss. That's why I kept getting stopped out. Sorry, guys. It took me way too long to see what I did there mistakenly. So let's say right now, this is what happens. Boom. Where's my 1 to 1? Gotta put that first. So boom, 1 to 1 would have got hit right here. This is where I sell one contract. Boom, I would have closed off $275 here because TP1 would have got hit. We bring that up to TP2, which is up here. So now that TP1 got hit here, I closed out $275. I would have brought my stop loss to break even, right? 0 0. I am in a risk-free trade. That means now I secure $275 off my first take profit. And now the rest of the two minis that I have, as you can see in orange, I have two minis left that are running. And I'm currently, does it show? I'm currently up 550 from those two minis. But now my take profit, my stop loss is at break even. I let this run until it hits my second TP. So let me put this actually for 1 to 3. That way you have more space. So this would be a 1 to 3. That way I could put my full take profit up here for the 1 to 3. So in reality, it should have been more. So 2,075 plus 275 plus this. So okay, so technically I would have been risking what 1,400 to make 2,275. Cool, right? So boom, we let price keep going until it hits TP2, which is my 1 to 2 right here. So let's keep going. Remember, my stop loss is at break even. I already secured $275. This is a risk-free trade. That means whatever price does, I'm leaving with $275 right now, because even if it reverted and hit my stop loss, this is a $0 loss, $0 win, because we're at break even. That's bars. We're going, we're going, we're going. All right. This is patience right here, just waiting. Damn, look how it's playing, getting close and close. Personally, if I was watching this and it got here, let's see. Yeah, if I was watching the candle like I am right now and I was actually watching this live, once it got here, boom. Okay, now it finally broke through, right? We finally hit TP2. But once it got here, because it teased it already. It was like what? From this point to here. So 75 to my TP at 0, 0. So 2.5 points. Literally just 2.5 points away from my take profit too. Once it did this, I was like, oh, okay, it's probably gonna come back up. I'm gonna let it do its thing. I'm like, okay, at this point, it's gonna hit it. Boom, and it did this, and it didn't go through, and it did that. I probably would have closed my TP2 because it was already close, right? You don't want to get too greedy. It's already there. Might as well close it. You don't have to wait for price to go, because if not, boom, you would have waited another, 20 something minutes, finally get a hit here. So now you close one more. This is your second take profit being hit, right? Now we're going back to our 1 to 3. At this point, we secured $860 from our first two take profits. Now you take your stop loss and you put it in between. Your take profit one was here, your entries here, so you probably put it somewhere around here. That means now, whatever happens in this trade, if this were live, you have already secured $816, and the possibility of closing out at $180, if price reverts all the way back down and stops you out right here, you now have your stop loss in profit. You're now making $180. Or if price never comes down and hits your stop loss and just keeps going up, you would have closed out at the um $1,500 mark, right? That's if price keeps going all the way up. Now let's put this as 3 speed and let this run. You're thinking, okay, price is probably gonna go crazy and push all the way up. Now we're getting close to being stopped out. Let price go. Let price do its thing. Oh, you're like, ooh, almost got stopped out. Okay, now it's gonna go up. Nope. And you get stopped out at profit. In profit. So right here you secured $1,040. This is a little bit, I think, almost half of what you would have secured if all three TPs hit profit. If all three TPs hit profit, yeah, I said that right. And then you could, I don't know if price ever, did it just keep going down? Yeah, still didn't even hit it. At this point, this is the next day. Like we're 12. Whoa. Was this Friday? Oh no, Monday, 12:50. Oh, there was probably, I think this was probably a holiday or something. September 2nd, Labor Day Monday. Labor Day Monday. But wouldn't the market be slow? Okay, so this is probably why it did this like crazy, and like no structure really happened because this was Labor Day Monday. This is Monday, September 2nd. Because if you let price run all the way through, markets close at what, 1 p.m.? Yep, markets close at 1 p.m. and they reopen at 6. This is the next day when all of this happened. And price still didn't even hit TP3. And you can't hold it. If you're trading futures, you can't hold past the closing day. For most prop firms, at least. I don't know about for a live account, but I know for sure you can't. On a prop firm, most of them don't allow you to hold or swing trade your trades, right? You gotta close before the end of the day, an hour before the end of the day, which is the trading day, which is like what, 5 p.m. I think, or depending on what you trade, it could be like 3 p.m. or 4 p.m. But yeah, anyways, you would have made 1,040 instead of like 2,275, I think it was. But see, this was three trades that we took where we made money. We didn't lose money. I forgot how much the others were, but these were three trades that we took where we made some type of money and didn't lose. And that was like three different scenarios, right? One at what, 9:30? The 9:30 one, what was the 9:30? At 9:30 we got sells, and then again, did we enter another trade? Oh, yeah. So at 9:30 we got sells for a 1-to-1, and then here I didn't take the trade. I wouldn't have taken it because I would have been looking for buys, right? When you're at the lows, you look for buys. When you're at the top, you look for sells. So here, price broke through and then continued pushing down. So this was when, where was it? Here, price broke through here, here, and then we had we had a test here. This was the FEG that was created, and then we got the entry here. This was a 1-to-2. So we had a 1-to-1 here. We just put it. Entry would have been here. Yeah, we had our kind of ratio. Oh, man, what's wrong with me? Yeah, we had our 1-to-3 hit here. We had a 1-to-3 as well, or I think a 1-to-2 here. Stop loss would have been the candle displacement. So up here, we had our 1-to-2 here. So 1-to-3 here, 1-to-2 here, and then another 1-to-2 here. The 1-to-3 wouldn't have gotten hit. So yeah, we went three trades. This this for the first trade, we did that blindly. We didn't see what was gonna happen. The second trade and the third trade, we seen what happened. Because this one, I was anticipating buys and then it gave us sells, but this was still a good entry. This one, I was looking for my buys, but it didn't happen. But then I noticed that we did retest into this FEG zone, and price just kept pushing. So these are three scenarios where you're going from 9:30 to 11, which sometimes I think ICT actually talks about it in some of his videos where he gets entries at 9:30. For the 9:45 and 9:50, those entries I see a lot more for currency pairs for people that trade forex, but for futures, people that trade stocks, you probably look at the 9:30 to the 10, 11 a.m. But it's better probably to trade that 10 or 11 for stocks. But hey, for futures, you get good entries. Either either way, the most money that was made was here, the 1,040. Here was, I forgot how much, 300 something, and here was 200 something. If you count all of that today, that was like probably 1,500 if you took all three trades. 1,500, and you would have risked what? The most risk was here, the 1,400. This was $300, and this was like $200, right? So 345, 200, 445, 1,004. So you're looking at about 2,000. You risk 2,000 to make what? 2,275. Actually, how much did we make? 1,040, 300, 1.5. Dang, that's not a good risk real because it's like we risked um what about 2,000 to make 1,500, which is negative risk to reward ratio. But look how like in all of our stop losses, once you entered, price never came back until it stopped us out. Once it stopped us out, it just kept going in the same direction. Once you entered, price never came back until it stopped us out. When it stopped us out, it never came back into that zone. It just kept going. Once we entered, price just kept going up until it came back and stopped us out. And here, the only time this was actually stopped out from the entry, this was all the way through right before market ended at 1 p.m. So you wouldn't have gotten stopped out until 12:51 if you were to hold it at break even. But see, once you get that entry, this is how price is supposed to move away from it. Entry away from it. Entry away from it. This is when you know you're in a good trade. But yeah, guys, this was a lot of yapping. I'm not gonna cut any of this. You're gonna see all my mistakes. This is like how you would probably trade if you were to sit at the computer. This is human emotions and everything. There's no like skip through, skip through, skip through. This is how you would have done it, straight to the point. I know it's probably going to be confusing for a lot of people since, I messed up here and there. It took my time for here and there. But this is to show you a realistic way of trading, of how your mind will play tricks with you. You would overthink. You would get confused. You'll be lost. This is how you trade with emotions because a lot of trading is psychology. It's not just the strategy. It's not just patterns and whatnot. A lot of it is psychology. A lot of people say 70% psychology, 80% psychology, and then the rest of it is your strategy. Because a lot of times, mostly all strategies work, right? It's you that needs to make it work. Any strategy could work to a certain degree. It's all about discernment and time. As long as you're trading that strategy during the right times, you can make it work. If you're buying bottoms and selling tops, just buying off the man's supply zones, resistance zones and whatever. If you're just buying off those zones, you could make it work as long as you're buying at the right time and selling at the right time. You can make what do you call those, the pattern trading works. So I have a candlestick chart pattern right here. You have double bottoms, triple bottoms, inverted head and shoulders. You got regular head and shoulders. You have symmetrical triangle, a bull flag. You got a cup and handle. You got a descending triangle. You can make all of that work as long as you're buying or selling at the right time. You're good. You could be a trend like trader like Tori trades. She's doing it because she knows when to buy and sell at the right time. If you have just one strategy, stick to it and keep back testing like I'm doing until it works. Not until it just works, until you see how to make it work. Because the thing is, it can work. But once you back test, you'll be able to see how to make it work for you. How to basically make it your edge, right? Because even if you have the strategy, you know what it is, you need to find out what your edge is. I used to think the edge was the strategy, but you're the one that has the edge with discernment to be able to trade that strategy, trading at the right times. So I appreciate you guys for watching. I don't know if this was 30 minutes or longer, but hey, Ankle Trades out. Thank you.